We start the webinar now. Hello, everyone. Welcome to our 8th GCS webinar on how can multinational companies mitigate the impact of COVID-19 on their transfer pricing review. We have arranged simultaneous interpretation for this webinar. If you prefer to listen to Chinese, you could choose Chinese channel in the interpretation button. Now I give the stage to Ms. Nicole Fu, our partner of Mazars Global China Services. Nicole.
Thank you, Lily. Good morning. Good afternoon, everyone. My name is Nicole Fu, a partner Global China Services, like Lily just said. The mission of Global China Services is to help Chinese companies investing outside China. And I'm your host today. Before starting the webinar, we would like to let you know some housekeeping rules. All the participants are on mute during the webinar, and this webinar is being recorded, and you will be able to replay it on YouTube, Youku, and Mazars China WeChat service account. During the webinar, please feel free to raise your questions by using the message box. Now let's start the webinar. The COVID-19 pandemic will have serious implications on transfer pricing for many multinational enterprises in the upcoming years. In December 2020, the OECD released its guidance that clarifies and illustrates the practical application of the arm's length principle as articulated in their transfer pricing guidelines. 4 priority issues were identified and are covered in the guidance. The first is comparability analysis. The second one is losses and the allocation of COVID-19 specific costs. The third is the government assistance program. And the last one is the APA, Advanced Pricing Agreements. Our transfer pricing expert today will share their view on how multinational enterprises should handle the impact of COVID-19 on transfer pricing for 2020, 2021, and the following years. Now, let me introduce the speakers to you. We have 4 people today. In addition to me, we have 3 experts. The first one is Frederick Bacher, who is a very senior tax lawyer in Mazars. Frederick, could you please introduce yourself?
Thank you, Nico. I'm Frederick Bacher. I'm heading the transfer pricing practice in Paris, France, and I'm part of the transfer pricing service line of Mazars. I have been working with my colleagues on 2 think tanks about the impact of COVID-19 on transfer pricing, starting in 2020, when there was no legislation and no comments from the OECD on the impact of COVID-19. We have been doing almost 6 webinars on this subject in the last 2 years in Europe.
Thank you, Frederick. The second speaker today is the nice lady, Joey Zhou, our tax partner in China. Hi, Joey. Could you please say hello to everyone?
Okay, thank you, Nico. My name is Joy, a tax partner based in Mazars, China. My expertise is tax and business consulting service, and having more than 15 years of PRC tax and international tax consulting experience. Very happy to have this opportunity to share transfer pricing insights under the COVID-19 pandemic, as it is still ongoing. Thank you.
Thanks, Joey. And the last one, the handsome guy, is Guillaume Melo, our transfer pricing expert. Hello, Guillaume. Would you please introduce yourself?
Hello, everyone, and thank you, Nico. My name is Guillaume Melo. I am a French attorney at law, and along with Frederick, I am part of the transfer pricing and international tax team of Mazars France.
Okay, thank you very much. Now let's quickly go through the agenda today. First, we will brief you how does OECD guidelines address the impact of COVID-19 on transfer pricing. Secondly, we will share with you the key takeaways for 2020, 2021, and the following years. And third, let's put into practice showing case of a limited risk distributor. And surely at the end, we will make a conclusion. So now let's start from the first subject. Joey will brief us how does OECD guidelines address the impact of COVID-19 on transfer pricing. Joey, the floor is yours.
Okay, sure, Nico. Okay, I will address 4 main issues from China perspective. And also they are also consistent with the OECD guidelines, which was published in December 2020. These OECD guidelines represent the consensus among member countries of the OECD inclusive framework on PEPs, including China. Since 2020, Australia, Singapore, New Zealand, Hong Kong, and also other countries and regions have made local interpretations and guidelines for transfer pricing arrangements of multinational companies. So in September 2021, China State Administration of Taxation issued the new notice in the form of questions and answers. This is the first time SAT provided the written guidelines on how tax authorities and multinational companies can analyze the impact of COVID-19 from transfer pricing perspective, mainly answer to the most common questions in the daily management of transfer pricing, and provide guidelines on principles. So it is encouraged for multinational companies to strengthen their internal transfer pricing compliance and proactively communicate with tax authority. Now we move to the first questions. This is about for the comparability analysis. So the emergency situation of the COVID-19 pandemic may bring significant challenges to the comparable analysis. From the SAT's answer, we can see that the company should meet the much higher requirements on transfer pricing compliance. Consequently, it will bring more challenge when performing the comparability analysis. So it is suggested focusing on the comparable data on the region, industry, product, and functional risk analysis of the same year, so as to reflect the impact of the COVID-19 pandemic on the profit level of the specific industry. So in addition, according to the PRC transfer pricing documentation requirements, the local file should be submitted before the next year, end of June. However, when searching the latest 3 years comparables for this year, due to the lag behind of the available database, the 2021 financial figures have not yet been publicly available till now. So, and then the available comparables only include 2020, 2019, even early years. It may significantly result in the deviation on the comparable analysis without immediate adjustment. So based on the current national tax system in China, the monetary system could identify those companies have significant changes on intercompany transaction, where the risk indicators set in the system. It might recognize as a high transfer pricing exposure to trigger the challenge from the tax authority. So based on the financial figures provided in the form of the related party transactions. So if the company's financial results have significantly deviation compared with the comparable analysis results, companies must prepare the supplementary explanations and also detailed analysis, including the background facts of their own industry, location, and the group with the pandemic impact. So now year-end is closing. The 2020 transfer pricing documentation was submitted upon request. We noticed that some tax authorities requested companies to provide the additional information for further assessment. In case any inquiries raised by the tax authority, company could reassess the 2020 transfer pricing documentation based on their new notice from SAT, and also further communicate with the competent tax authority with detailed special factor analysis, especially for the impact of COVID-19 pandemic. For the preparation of the 2021 transfer pricing documentation before end of June 2022, it is also suggested to take into account the impact of COVID-19 pandemic in the transfer pricing adjustment if necessary. Okay, now we move to the second question. It is about the loss and the allocation of COVID-19 specific costs. So same as the OECD. So same as the OECD guidelines in the new SAT notice. For the additional cost due to the pandemic prevention and control, all the increased operating expense caused by the impact of the pandemic. So it is suggested considering the arrangement of the independent third parties when determining how the specific costs are allocated between related parties. For those companies have significant fluctuation on revenue and profit level, especially for companies have negative impacts. So if we consider preparing the comparison with the independent third parties for the same year, and also the comparisons with the historical financial figures in the past, so as to determine whether the exact reasons of the fluctuations are caused by the COVID-19 pandemic, as well as the numerical analysis on the allocation of the additional costs and expenses within the overseas related party. So, for example, factory production shutdown lead to the reduction of sales, the increase of the logistics and the transportation costs, the loss of the inventory provision, the increase of the labor and labor cost, and also the pandemic prevention expenses. It is necessary to analyze the function and the risk as well as comparability analysis among all related parties. So in order to make sure clearly stated the allocations in the current year profit level. Okay, now we move to the question 3. So this is about the government assistance program. So during the COVID-19 pandemic, the Chinese government introduced a series of assistance programs, which are in the form of rent, taxes, financing, and also other aspects. So the corresponding treatment is also consistent with the OECD guidelines. The relevant impact on transfer pricing arrangements may be reflected in the comparable analysis. If it is the case, then companies should provide the subsidy information in the transfer pricing documentation to support the corresponding analysis. So from the accounting-wise, companies should appear on the accounting treatment of this subsidy received from government. It have impact in P&L. So for example, if the subsidy are booked in non-operating income, generally they have no impact on transfer pricing results on related party transaction. However, if this subsidy has impact on the related party transactions, subsidies are used to offset related party payables, then it is suggested to performing a more detailed transfer pricing analysis based on the benchmarking and economic factor analysis in related to the COVID-19 subsidies. So some tax authorities may consider the excellent ability of the pandemic control and special government assistance program are treated as part of the local saving advantage. Okay, now we move to the question 4. This is about APA. So according to the prevailing APA circular number 64 in China, in case of any material change affecting the sent APA during the effective period, the company shall report in writing to the competent tax authority to explain the impact with the purchase reporting within 30 days when incurred. So this new notice further clarifies if the influence of COVID-19 pandemic leads to the substantial changes in business environments as well as the critical assumptions. So during the APA effective period, companies should communicate with the tax authorities from time to time and providing additional analysis as well as a proposal if the standard APA is going to be executed during the effective period. It is important to seek for the understanding and cooperation with the tax authorities and mitigate the impact of COVID-19 pandemic in a large extent. So this view is also consistent with the OECD guidelines. But practically, it is rarely happen for Chinese tax authority to suspend or rescind APA due to the COVID-19 pandemic. If companies are still in normal operation, We suggest preparing a detailed and reasonable analysis to take into account the business environment of the COVID-19 pandemic to reflect the significant impact to related party transactions. So will we renew the APA in the future? So in conclusion, based on the arm's length principle, the competent tax authority should make the reasonable adjustments, take into account the impact of pandemic. However, it may have uncertainty on how to interpret and implement the new SAT notice in the local tax authorities. So therefore, companies should review the current transfer pricing policy based on the actual performance before year end, and also collect the financial updates of the independent parties, so as to make sure the considerable solutions to mitigate the potential transfer pricing exposure, as well as adjustments on transfer pricing arrangement. Okay.
Thanks, Joey, for your insights on this recent notice of transfer pricing practice for the impact of COVID-19 pandemic in China. Now let's move to a more European point of view. So Frédéric and Guillaume, according to you, what are the key takeaways of transfer pricing during the COVID-19 period?
Thank you, Nico. Guillaume and I will talk about the key takeaway for 2020 and 2021 because the COVID is still lasting, unfortunately. And this may also have some impact, the COVID may have also some impact on the transfer prices in 2022. So now, is December 2021, and we believe that many taxpayers are preparing or are already prepared their 2020 transfer pricing documentation and will start next year their 2021 TP documentation. So this documentation must document the impact of COVID-19 pandemic on your group and local entities around the globe. So we're going to talk about what should be included in your transfer pricing documentation for 4Y 2020 and 4Y 2021. And Guillaume is going to start with the industry analysis. Guillaume, the floor is yours.
Thank you, Frédéric. The first item to be included in the transfer pricing documentation is an industry analysis. It is important to analyze how your industry and your market have been affected by the COVID-19 crisis and the direct impact on your company. In this analysis, some macroeconomic data, like the GDP data that is provided by the central bank or government agency, can be included. To illustrate my point, you can include the GDP of the country where the company operates, but you can also mention the GDP of the locations of your major customers in the documentation. As an example, one of our clients has been impacted by the closure of one of its main historical customers due to the COVID-19, while its own market was only slightly affected by the COVID-19. Some country-specific data might be preferred to regional economic data, as the COVID-19 pandemic might have impacted different countries, even located in the same geographical area due to local government decisions, such as lockdowns, or simply due to the stronger impact of the virus at the local level. The change in the price of raw materials, like the increase in the price of components due to the constant demand and scarce supply, may also be documented. Frédéric, can you talk about the impact of 2021?
Sure, Guillaume. Thank you. If we focus on 2021, it is still critical to analyze on a case-by-case basis the situation of the sector, because we have clients that have a very diverse impact, even within the same sector, and it is very important to document the specificity of the impact on your business. Some sectors may be still out of the crisis now, and some sectors may be still in the crisis. So the situation can be diverse, and the impact on their transfer pricing can vary a lot. So I propose now that we review the documentation of the impact, and Guillaume, the floor is yours.
Thanks again, Frédéric. So the second item is an analysis of the impact of the COVID-19 pandemic on your company. It could be a comparison of the budgeted financial data to the actual results for each entity of a group with some explanations and evidences.
It also could be an analysis on how the changes due to COVID-19, including the change of sales channels, the change in supply chain, or change in customer behavior.
If we focus on 2021, we recommend you compare the situation of a group with the situation of the industry. The differences identified between those two must be documented. Maybe, Frederic, you could illustrate it with the local customers in the automotive sector?
Sure, Guillaume. We have several clients in the automotive sector. Some are still facing, some are still very hit with the COVID-19 impact, while some others are almost not impacted by the COVID-19. This is really dependent upon the products they manufacture and the clients they deal with. Even with the semiconductors, the impact can be very crisis. The impact can be also very, very different. Therefore, it is really a case-by-case documentation that need to be prepared to compare the company's situation and the market situation. So, Guillaume, you're going to talk about the documentation of government aid, sorry. With this, I think the third item is the documentation of government aid. That means that you have to document the nature of the government aids. And we have seen a very different type of government aids, especially within Europe, where there's been a lot of helps provided, especially in 2020, but some lasted in 2021. Those were mainly assistance to maintain employment and try to compensate for the reduction in activity, which was paid to the companies in order for them to maintain employment. So that affects transfer pricing because those were income that were provided to the companies that enabled them to reduce their costs. Please note that the deductibility of government aid from the cost basis is mostly accepted. However, some countries have already expressed that they will not accept the deduction of those government aid from the costs, such as Canada, Singapore, or Senegal, who do not accept any deduction of this cost, so that companies that are using the net cost plus cannot deduct the government aids from their cost basis when they apply the markup. So if we focus on 2021, a case-by-case analysis must be performed about the government aids, which have been maintained in certain countries. So I think now another important item, Guillaume, is the functional analysis review, because it can also have been impacted by the COVID-19 crisis. So Guillaume, tell us.
Thank you, Frederic. So in this part that is of course required from the OECD guidelines, the COVID-19 crisis may have led you to change the supply chain or the allocation of functions within the group. Therefore, it is very important for multinational enterprises to review the functional analysis and update such analysis if need be. Besides, information related to the entities that take decisions related to the COVID-19 risk management should be included. This is crucial, as the tax authorities can require the taxpayer to indicate which entity actually controls the group's positions and therefore bears the relevant risk. So
yeah,
now,
that's a very important item, I think, the functional analysis, because what we have seen is that some companies have taken different functions and risks during the COVID-19, which may have impacted on their transfer pricing methodology and their remuneration. So that's a very important point to consider. Another item to consider are the contractual arrangements. Now, because companies need to make sure that their contractual arrangements are up to date. For example, if they have changed the remuneration of their subsidiaries, they need to make sure that this has been properly reflected in their contractual arrangements. The taxpayers then should highlight in the transfer pricing documentation any changes to the facts and circumstances, such as change in functional analysis, for example, which have been stated in the intercompany agreement due to COVID-19 crisis. As an example, many of our clients have changed the remuneration in their intercompany agreements. Some have added also some force majeure clause in order to contemplate the crisis. So please, and some may have terminated their agreements as a result of the COVID-19 crisis. So again, companies should aim to demonstrate that independent parties in the comparable circumstances will have made those modifications to their contractual arrangements. Because nobody can be forced to maintain an agreement if the conditions have changed dramatically. So we're now going to talk about the transfer pricing adjustments. And if we can go to next slide, maybe Guillaume.
Yes, of course. The sixth item is to document the transfer pricing adjustments. In this section, you have to identify if transfer pricing adjustments are needed. If a group has been impacted by the crisis, the entire adjustment process must be reliably documented. We will illustrate this point by putting into practice in the next section. We suggest making the transfer pricing adjustments by the year end, as stated by Joy. However, some major public data might not be available by the year end, so the adjustment may be done with available data and corrected on the following fiscal year in order to be fully in line with the economic reality. And now, Frederic is going to talk about something very important, that is the treatment of low-risk entities.
Thank you, Guillaume. Yeah, low-risk entities are viewed as viewed as being forced to make profit, you know, because they are low risk. So many groups believe that they should guarantee a profit whatever happens to low risk entities. This can be low risk manufacturers, low risk distributors, or low risk service providers. However, with the COVID-19, we've been thinking a lot about that subject, and we came to the conclusion that potentially, and subject to the case-by-case basis, low-risk entities could potentially be in a loss situation during the COVID-19 because of the shutdown of the markets that are already not managed by their headquarters. So the headquarters, basically, of those multinationals are no longer forced to guarantee a certain level of profit to their low-risk entities. However, if multinationals take this position, they should make sure that they can demonstrate in the functional analysis and risk analysis that those low-risk entities really assume a certain amount of risk, mainly related to the market risk. Then the entity should be allowed to bear losses due to COVID-19 crisis that affected the market. It's again a documentation matter that is very important because we can anticipate that tax authorities after the COVID-19, when they perform their tax audits, will expect that low-risk entities should be making losses. So if you should not be making losses. So if you have let your low-risk entities making losses, then you need to document why you did that and why it was arm's length at the time you make the decision. Guillaume, we are now going to talk about advanced pricing agreement. Maybe you can explain what this is and the impact of COVID-19 on APAs.
Of course. So an advanced pricing arrangement is an agreement between several or one only tax administration and the taxpayer. It can be, so as I said, unilateral or bilateral or multilateral. As stated by Joey, taxpayers should determine whether the COVID-19 affects their APAs. If yes, we recommend you document the crisis impact on the transfer pricing documentation and discuss with the competent authorities as early as possible.
Thank you, Guillaume. So to conclude with this section, the COVID-19 pandemic increases the burden of the proof of taxpayers, and in parallel, it increases the risk of multinationals because they are exposed to diverse positions from the tax authorities around the globe, which could lead potentially to more risk of double taxation in general. Therefore, we suggest that you start to prepare your transfer pricing documentation for 2020 and quickly 2021 next year in order to have contemporaneous documentation about the position you were forced to take during the COVID-19. Thank you.
Thank you, Frederic.
Nico, the floor is yours.
Thank you, Frederic, and thank you, Guillaume. The takeaways are very interesting. In fact, many of our Chinese clients have the distribution subsidiaries in Europe, and they are considered as the limited risk entities. And in fact, they really suffer some losses during the pandemic. So how are we going to put into use for all the takeaways? Do we have any practical recommendations to our clients?
Thank you, Nico. Of course, we had to build practical recommendations for our clients back in 2020, and Guillaume and I brainstorm a lot on this subject, and we will now put it into practice in this example, the implementation of transfer pricing adjustments that we have designed. Our example concerns a limited risk distributor that has been affected by the COVID-19 pandemic. So we're going to start with the assessment of the impact of the COVID-19. Guillaume, can you please explain what must the group do to determine an arm's length remuneration for this company, please?
Sure. First of all, the group must determine the impact of the COVID-19 pandemic on the company named Alpha for the example. To do so, it is necessary to assess, firstly, the impact of the COVID-19 pandemic in fiscal year 2021 by determining the decrease of sales and the decrease of cost of goods sold. Please note that the comparison must be performed with the last year that has not been impacted by the pandemic, as the 2017 to 2019 financial data of comparable companies are not affected by any exceptional market conditions.
Yeah, the difficulty is that when looking at the comparable studies, we need to look back 3 years back. So basically, our years of comparison, as you mentioned, are 2017 to 2019, which were the last years which were not impacted. So in our example, the group wants to determine the FYI 2021 remuneration to be granted to the limited risk distributor. As the 2021 financial data are not available yet, because they will not be available in the commercial databases until Q3 or Q4 2022, we compare the 2019 and the 2020 revenue, leading to a 50% decrease, and the 2019 and 2020 cost of goods sold, leading to a 47% decrease. And basically, we need to make sure that we compare the sales decrease with the cost decrease. That's why we take both the revenue and the cost of goods sold. Guillaume, can you explain the next step?
Yeah, the next step is that the company must also determine the amount of follow-ups received in the context of government aids accorded to companies affected by the COVID-19 pandemic.
So we can see that Alpha received furlough for more than 300,000 euros. The treatment of these government aids depends on the local requirements, as we already mentioned. In the case at hand, the requirement were to reduce the amount from the cost base. And this is the French example, where we are allowed to deduct from the cost base any income that reduces the cost. So Guillaume, can you explain the final process?
Finally, as the last step, we compare the revenue decrease to the average decrease in turnover in the market by performing an industry analysis. In the case at hand, the decrease in the Alpha's turnover is very similar to the average decrease in the market. This increases the reliability of the analysis. However, if this was not the case, it would have been mandatory to determine the origins of the difference.
Thank you, Guillaume. Now we are going to determine the need of transfer pricing adjustment. So we are going to look at the projection of the companies for FY 2021 impact of the COVID-19 pandemic on comparable companies. Once the assumption determined for the Alpha company, we proceeded to the adjustment of the financial data for the years 2017, 2018, and 2019 of the comparable companies. As you can see, we proceed in 2 steps. On the one hand, we have determined the weighted average operating margin of the comparables without any adjustments. Then we have adjusted the turnover and the operating cost of the comparable companies based on the assumptions provided by Alpha. This has allowed us to determine an adjusted operating margin, and then we computed the adjusted weighted average operating margins of each comparable. Can we go to the next slide? And Guillaume, can you comment it?
Yes, this slide shows you the initial interquartile range on the left, meaning with no adjustments, and the adjusted range that is on the right part of the slide. We can see that the initial interquartile range that was between 1 and 5% is now fully negative based on the assumptions of Alpha. However, please note that a negative range does not necessarily mean that the company must bear all losses. The transfer pricing adjustments to be performed are the following. In case of sales increase, the remuneration should be based on the initial range. Indeed, some companies have been affected by the COVID-19 pandemic, but with a sales increase. In case of sales decrease, and if the adjusted range is positive, the adjustment should be based on the adjusted range. Now, in the case of sales decrease, and if the adjusted interquartile range is negative, there are two options. If the company's EBIT is positive, adjustments must be based on costs, meaning with no markup to be applied. If the company's EBIT is negative, no adjustments may be performed. In the case at hand, the EBIT was positive, and the adjusted interquartile range was negative, as we can see on the right. Therefore, we advise the group to adjust Alpha's remunerations based on costs.
Thank you, Guillaume. Can we go to the next slide, please? Yes. Finally, we have performed a substantive analysis by determining the level of profit of the same comparable companies using their FYI20 financial data. Therefore, the substantive analysis is based on an annual analysis and not a pluriannual analysis as recommended by the OECD during the COVID-19. So this could change in 2022 for industries that have been impacted during 2020 and 2021, so we can base our work on a biannual analysis. This table shows that the contemporaneous analysis, taking into account the company's situation as well as the industry situations, leads to reliable results. Indeed, we can see that the difference between the adjusted interquartile range based on the Alpha company's assumptions and the FYI 2020 interquartile range are very similar. So as a conclusion, it is important to carry out a careful case-by-case analysis of the situation. Each step of the analysis must be accurately documented in order to demonstrate its economic relevance and to be able to face future tax audits. Thank you for your audience. Nico, the floor is yours.
Thanks again. Thanks, guys. So, Joey, how do you think about this case? And do you think from Chinese point of view or from the group point of view, what else shall we do? Or do you have any tips to our clients?
Sure, Nico. So this is a common case for the limited risk distributors during the COVID-19 pandemic period. And the detailed explanations to the approach of the transfer pricing adjustment are very helpful. And this view happened on the WUFI invested by the overseas group in China, as well as the subsidiaries in the European countries invested by the Chinese group. So according to the prevailing transfer pricing regulations in China, companies engage in single production and the distribution business. So in principle, it should maintain the reasonable profit level in China. Once companies suffer losses or not in line with the group transfer pricing policy during the COVID-19 pandemic period, it may face the challenge and also potential transfer pricing investigation from the tax authority. So therefore, the comparability analysis is particularly important for the limited risk distributor suffering loss during the COVID-19 pandemic period. And the companies, they must prepare the transfer pricing documentation based on the detailed, accurate, and reasonable analysis. So that will including the master file, local file, adjusted benchmarking studies and the contractual arrangement and so on. So, and also in China, these transfer pricing documents are always required to keep for at least 10 years in case any inspections from tax authority. So once the transfer pricing are adjusted, so from the new SAT notice, it gives the possibility to assess the differential adjustment during the transfer pricing investigation. So the tax authority understands the challenge from the COVID-19 pandemic on multinational companies, and also they give the positive attitude to support companies to well manage the transfer pricing exposures. However, we would like to remind is that the impact of the COVID-19 pandemic is not always the only reason to justify the transfer price adjustment. So in SAT new notice, it also requests the numerical analysis on cost and expenses, as well as a comparability analysis. And that is, it raises much higher requirement to the companies on transfer pricing management. So for the companies who are required to file the CPCI report, so it is necessary to carry out a careful review if the group has been impacted by the COVID-19 pandemic to ensure the transfer pricing adjustment have been included. And for companies have set the APA, if the actual margin is lower than the agreed margin in the APA, it is necessary to assess the existing APAs and determine whether it is appropriate to terminate APAs or seek the new APAs. So to be honest, it is time-consuming procedures to conclude a new APA. So we think it's important we could do is to seek for the understanding and cooperation with the tax authority and mitigate the impact of COVID-19 pandemic in a large extent. So we suggest preparing the detailed and reasonable analysis to take into account the business environment under the COVID-19 pandemic to reflect the significant impacts to related party transactions. So when renew the APA in the future. Okay, thank you, Nico. It's your floor.
Thank you very much. Thanks to all. All the information is quite practical. So in fact, we have already received 2 questions offline. So if you don't mind, I would like to ask the 2 questions on behalf of my clients before going to the conclusion. The first one is that we use the TNMM method to remunerate its limited risk subsidiaries. Can I allocate all or part of my group's losses to these subsidiaries? Who is going to lead this question?
If you want, I can take it. So yes, the answer is yes, and I will explain you why. Basically, the COVID-19, because of the lockdown, has created a situation where multinationals, in some cases, cannot any longer guarantee a profit to their limited risk distributors. Because multinationals are not responsible for the local lockdowns, which may have forced to shut down the shops or the distribution activities in general terms of that multinational. So it is no longer responsible to guarantee a profit, and potentially limited risk distributors could be in a loss situation during 2020 and 2021.
Okay, thanks a lot, Farik. And there is a second question. It's very, very practical in the daily life. So when will 2020 and 2021 financial data of the comparable companies be available? Who can answer this one?
I can take it if you want. Yeah, I can. So we mainly use the Orbis database that has information on company and entities across the globe. The 2020 financial data are almost all available now in this database. However, as stated by Frederick, the 2021 data are not expected to be available before Q3 or Q4 2022.
Thank you, Guillaume. So this is a question very often asked by clients. Thank you. Now let's move to the conclusion. After we will see if we have time to handle more questions. So the crisis period, so let's say COVID-19 will impact transfer pricing during and post the crisis. And the crisis period may be longer for certain sectors, such as the aircraft industry or tourism sector, and certain areas of the world where new lockdowns may take place. The COVID-19 crisis generated significant losses of income for many countries, which have intensified their tax audit programs. Owing to all the above, multinational enterprises need to closely manage their transfer prices and prepare a robust TP documentation to face future tax audits. Okay, so it seems we still have some time. So all the audience will have the opportunity, you still have time to type your questions if you have in the message box. But from my point of view, I have one more question, if you don't mind. How do you propose to deal with the different economic situations in different regions, countries? How do you think, Frederic?
Potentially by treating differently the subsidiaries of the multinationals in the different regions, different countries, because even within the same region, the lockdown periods may have been different, subject to the countries. So really, it will be an analysis on a case-by-case basis for each individual subsidiary. And for example, Guillaume and myself are currently working to determine the impact of the COVID-19 on one group. And we are looking at each individual subsidiary and taking different positions subject to the subsidiary, and we will document that into the TP documentation of that group.
Thank you, Frederic. And Joey, how do you think about this question as an expert in Asia Pacific?
Yeah, I agree with Frederic. I think it's important in need to performing a substantive and case-by-case analysis on the important related party transactions during the economic uncertain period. So we compare with the actual profit level of the company and with the comparable companies using their the 2020 financial data before the year end. I think the December it will be the right time, and each step of this analysis must be accurately documented. And also, it is necessary if we have noticed for some variations when we do the comparison. So it is necessary to proactively communicate with the competent tax authority and to seek for the understanding and the cooperation, and so as we can to mitigate the impact of the COVID-19 pandemic in a large extent. Okay.
Yeah, thanks, Joy. How about you, Guillaume? Any recommendation?
Thank you, Nico. I fully agree with Frederic and Joy. My recommendation is to reliably document the general and regional impact on a case-by-case basis of the COVID-19 pandemic on your group as early as possible.
Okay, thank you, guys. So again, a big thanks again to Frederic, Guillaume, and Joey for your great presentation today. We also sincerely appreciate the participation of all the audience today. If your questions were not answered, we will revert to you with the information via emails. You can contact Frederic and Joey with their email address presenting here. If you prefer to speak Mandarin, please feel free to contact Mazars China colleagues or Mazars Global China Services. Our experts who can speak Mandarin will be happy to assist you. Our webinar is finished today. Welcome, follow us on WeChat, LinkedIn, and you can go to Mazars website to visit for more information. Thank you. Thank you. Have a good evening. Have a good day.
Bye-bye.
Have a good day. Thank you, everybody.
Bye-bye.
Bye-bye.